If you're looking to diversify your investment portfolios, then now may be the time to consider investing in oil and gas. Today, many energy experts agree that oil and gas has the potential to remain in a bull market for years to come. This is all largely driven by a supply-demand imbalance that continues to persist. But when will the world reach peak oil demand? Well, there happens to be a lot of debate around when and if this will occur. And while most discuss this topic with good intentions, it often results in what experts have dubbed energy ignorance. Essentially, energy ignorance is 1. The lack of knowledge on how oil is used. 2. What are the alternatives to oil? And 3. What is a reasonable, rational timeline for those alternatives to displace oil consumption? Think of it this way. Many people assume that the primary driver of oil demand is the gasoline we use for our cars. And as more companies move to hybrid and all-electric vehicles, an investor might reasonably expect demand for oil to plummet. According to Eugene M. Kartukov, head of the World Energy Analysis and Forecasting Group, approximately 60% of oil is used for transportation, and the remaining 40% is not. Of that 60%, only 27% of demand is for cars. Last year, there were approximately 6.5 million electric vehicles sold globally. However, energy experts believe that it'll likely take until at least 2040 for another alternative, such as hydrogen, to become more pervasive. The remaining 40% is driven by population growth and comes from such things as petrochemicals, lubricants, plastics, cement, and agriculture. Between now and 2050, the global population is expected to grow by 32%, an increase that will very likely keep demand for oil at all-time highs. The era of oil and gas hypergrowth may be nearing its end, putting the world on the verge of entering an oil supply crisis. However, by some projections, oil prices will need to reach an all-time high to limit discretionary demand. Keep in mind that industry experts believe this is all still several years in the future. Historically, the relationship between inflation and natural resource investments has often been referred to as complicated, and historical data supports this. As the US dollar weakens, oil prices tend to increase. Likewise, a cyclical decline in the dollar tends to favor oil investments, which may bode well for oil and gas investors. It's true to some extent that there is a stigma associated with investing in oil and gas. Despite this, oil and gas investments have the potential to continue to be in high demand for years to come. And if done thoughtfully, oil and gas may have the potential to be a positive addition to your portfolio. At Perch Wealth, our team would be happy to sit down and discuss our investment model with prospective investors. We're here to help you achieve your investment goals. Contact a dedicated representative today or visit perchwealth.com for more information. This video presentation is not an offer to buy or a solicitation to sell a security. The video is a discussion pertaining to one or more investment strategies and/or asset classes, and is not a discussion of any specific offering, past or present, of securities. As a reminder, there is no guarantee that any investment or strategy will perform as targeted, and any investment involves the risk of the loss of some or all principal invested. This video contains statements intended for educational and hypothetical purposes only, and is not to be construed as a promise of performance. Information presented herein reflects the opinions of the speakers and is from sources believed to be reliable, but all information is subject to change. Not an offer to buy, nor a solicitation to sell securities. Information herein is provided for information purposes only and should not be relied upon to make an investment decision. All investing involves risk of loss of some or all principal invested. Past performance is not indicative of future results. Speak to your finance and/or tax professional prior to investing. Securities offered through Emerson Equity LLC, member FINRA SIPC. Only available in states where Emerson Equity LLC is registered. Emerson Equity LLC is not affiliated with any other entities identified in this communication. There is no guarantee that any strategy will be successful or achieve investment objectives. Potential for property loss. All real estate investments have the potential to lose value during the life of the investments. Change of tax status. The income stream and depreciation schedule for any investment property may affect the property owner's income bracket and/or tax status. An unfavorable tax ruling may cancel deferral of capital gains and result in immediate tax liabilities. Potential for foreclosure. All financed real estate investments have potential for foreclosure. Illiquidity. Because 1031 exchanges are commonly offered through private placement offerings and are illiquid securities, there is no secondary market for these investments. Reduction or elimination of monthly cash flow distributions. Like any investment in real estate, if a property unexpectedly loses tenants or sustains substantial damage, there is potential for suspension of cash flow distributions. Impact of fees and expenses. Costs associated with the transaction may impact investors' return and may outweigh the tax benefits.